Most central banks are on a Christmas break and big financial institutions are closed, but GBPUSD remains bullish. Why is that? In this video, I'll be giving you a full breakdown of the market behavior this December and why GBPUSD has moved as much as 300 pips in the last 2 weeks. In line with that, I just want to use this opportunity to inform you guys that I'm offering a Forex vacation bootcamp which is going to take place as from next year February, and we are going to be doing live trading together, and it's going to be a physical 3 days bootcamp. In this bootcamp, we are also be doing a funded account giveaway, and we are going to be doing networking and interacting with Forex traders who get to attend. The spots are just very limited, and it is very cheap to attend, and it's limited because it's going to take place only here in Cameroon. But that is everything about the bootcamp is going to be documented and posted live here on YouTube. So if you are interested, you can just click on the comment section below and comment there bootcamp, and I will get to you personally so that we can add you and we can go ahead with the process. Isn't it concerning that when you go to your charts and you look at it, you get to realize that the market remains bullish regardless of the holiday period and Christmas break which we are currently in? And this is why I am making this video, because I am going to be explaining all these factors and relating it to fundamental aspects and showing you why the market remains bullish and why there is this so much strength on GBPUSD alone. For us to truly understand why the market is currently bullish, I would like to date you guys as far back as the 8th of this December, where we had the NFP news release at exactly 1:30 p.m. This news release was positive and came out with a result of 199,000 new jobs that was released on that day, and this was a positive result as compared to the forecast, and this gave strength to USD. The USD in turn gave weakness to other pairs like GBPUSD, but this was quickly followed by the CPI and the FOMC. The Consumer Price Index, popularly known as the CPI, which was released on Tuesday the 12th of December at exactly 2:30 p.m. This news came out with a result of 3.1 year-on-year result, and this was a forecast which actually met the investors' expectation, and this wasn't a good sign for the USD, because the forecast meeting investors' expectation actually meant that CPI, which was a consumer price index, was held constant and consumers were not having enough money to purchase goods and services in the market, excluding food and energy. So this resulted to a weakness in the dollar, and NFP not being able to go as much as bullish as possible enough also resulted in an amplified weakness in the dollar. And this amplified weakness in the dollar now started bringing about the rise in GBPUSD, and this was where we began seeing energy coming on to other negatively correlated pairs to the US dollar like GBPUSD, EURUSD, and so many other pairs. But all this was just the icing of the cake, because FOMC was still at bay and was still supposed to be released. And on the day of which FOMC got released, this was at exactly 8 p.m. on the 13th of this December. Jerome Powell, who was the chairman of the Fed, actually made some really good statements, which was a good point for us to take note of. And I would like us to watch a little clip of seeing exactly what he said, getting highlights of exactly what he said and how it is affecting the market currently, so that you guys can know the strength of the Fed and know exactly how to handle the market immediately after the news takes place.
The market's rallying as the Fed indicates there could be 3 rate cuts next year. Jennifer Schonberger joining us now from the Federal Reserve.
A 3 rate cut is already a warning at the beginning of the video.
Good afternoon, Josh. Fed Chair Jay Powell saying that officials believe that they are at or near the peak for interest rates on this cycle, but that they still want to keep rate hikes on the table as a possibility. Here are 3 takeaways from Fed Chair Powell's press conference this afternoon. Number 1, Fed officials still need to see further progress that inflation is coming down lower to be confident that they can see inflation sustainably move to their 2% target. Number 2, they expect growth to slow. Chair Powell said that growth had slowed substantially from the torrid pace in the third quarter, and officials expect growth to slow to 1.4% next year from an expected 2.5% this year. That brings me to takeaway number 3. The conversation within the FOMC is now turning to rate cuts. Powell saying that conversations at this point are preliminary, but that is the direction going forward, and there's no consensus yet on rate cuts. When I asked Chair Powell when the Fed could begin cutting, he told me it will be before they reach their 2% target.
It takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and, I think you'll see a reasonable estimate of the time lags and things like that it would take. I wouldn't want to identify any one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
With all the analysis we have drawn from the news, if we bring that to the charts, we are going to narrate the story now very clearly. Because first thing first, we got to notice that we have a series of flashes of bullish candles all the way to the top. And these are flashes which are indications of a weak dollar, okay? These are indications of the news coming out negative against the Gbpusd and other pound pairs, okay? So that being said, guys, you can look at this chart and you can see clearly how the market looks bullish here. But it doesn't just end there. Let's come into the recent market right now. Moving into the recent market right now, you can see clearly here that we have come to an area of resistance on the chart, and this area of resistance has been broken, and now we are currently having a retest on that area of resistance. And now I would like to cover this area of resistance with this bar here. I would like to cover that with this bar here. Sorry, I'll cover that like that. Exactly. And then the next thing I'll be doing on that point is I'll step to a lower time frame to show you guys exactly what is happening around that area, because we can notice clearly that there is a minor bullish trend line in the major bullish trend line. So if I step to a lower time frame such as the 1 hour time frame, you're going to see that the market was bullish on these points. The market came here bullish, it came to this area of resistance, rejected, came here, rejected, and then finally broke off from that area of resistance. But finally the market has come back like some kind of retest into that same area of resistance. But I'm looking forward to see that the market respects this trend line and continues going bullish. If it doesn't respect this trend line, it's going to go bearish all the way to this next trend line, which is down here, approximately down here. So if the market comes to this point here, then we will definitely be looking for any psychological level here to ride the market all the way again to the upside. But the market being on this psychological level here explains more to me that it is time for me to start looking for bullish opportunities around this zone for the market to ride bullish. And if the market has to go bullish, the next zone which we will be looking at is at exactly 1.3000, and that is approximately 250 pips far apart. The bias of the Fed is the direction of the market. So the reason why I'm saying this is because nobody can go against the dollar. If the dollar decides to move to a particular direction, then all the other pairs will decide to either follow what the dollar is doing or go against what they will do exact opposite of what the dollar is doing. If you have not watched my previous video, guys, I would like to recommend that to you guys right here. And that being said, guys, I hope you guys got some value out of this video. I hope you guys learned something new, and I'll be signing out. This is your Alpha Trader. Stay safe and peace out, guys.